Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is September 25th, 2025, and we're diving into LightPath Technologies' fiscal 2025 fourth quarter and full year financial results. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. LightPath Technologies, a leader in next-generation optics and imaging systems, has just released their latest earnings report. There's a lot to unpack, especially with their strategic shift away from germanium optics.
Revenue and profitability overview. Let's start with the top line. LightPath reported a significant increase in revenue for the fourth quarter, up 41.4% year-over-year to $12.2 million. John, what are the key drivers behind this growth?
The revenue growth is primarily driven by strong demand for their infrared components and assemblies. The assemblies and modules segment, in particular, saw a 203% increase, which is quite impressive. However, despite the revenue growth, the net loss widened to $7.1 million, largely due to increased operating expenses and non-cash charges related to acquisitions.
Strategic initiatives and product innovation. LightPath has been focusing on strategic initiatives, particularly moving away from germanium optics. Can you elaborate on their progress in this area?
Absolutely. LightPath is capitalizing on the demand for germanium-free optics by scaling their proprietary BlackDiamond glass. This shift is not only reducing supply chain risks, but also attracting significant orders, such as the $18.2 million and $22.1 million IR camera orders. Additionally, they've secured an $8 million strategic investment to support growth in the drone sector.
Operational efficiencies and future outlook. Despite the revenue growth, operating expenses have increased significantly. How is LightPath managing these costs, and what does this mean for their future outlook?
The increase in operating expenses is mainly due to the integration of G5 and higher sales and marketing spend. While this has impacted their short-term profitability, these investments are crucial for scaling their operations and capturing future growth opportunities. LightPath is focused on converting their robust order pipeline into sustainable revenue growth through fiscal 2026 and beyond.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 3 cents, but the actual EPS came in at 90.16 cents. What factors contributed to this larger-than-expected loss?
The larger loss can be attributed to increased non-cash expenses related to acquisitions and higher operating costs. The integration of G5 and the strategic investments in new product development have temporarily weighed on their earnings, but these are expected to drive long-term growth.
Key takeaways. In summary, LightPath Technologies has shown strong revenue growth driven by demand for their infrared products and strategic shift towards germanium-free optics. However, the larger-than-expected EPS loss highlights the challenges of integrating acquisitions and scaling operations. Thank you for joining us, John.
Thank you. LightPath's strategic initiatives position them well for future growth, but investors should be mindful of the near-term financial challenges. It's an exciting time for the company as they continue to innovate and expand their market reach.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more in-depth financial analysis. We'd love to hear your thoughts on LightPath's performance in the comments below.